And welcome to episode number 10 now, incredibly, of The Bottom Line. I'm joined as always by my co-host Syed. We're going to, as always, start off with our tech update, and we have a few major topics to talk about today. So we're going to start off by talking about the short squeeze and how GME, AMC, and all those heavily shorted stocks, which made a massive run a couple weeks ago, seem to be resurfacing. So we're going to talk a little bit more about that. I'm going to also talk about how we should be defensive in the stock market, given the fact that we are seeing sharp and steep declines, really, in especially tech stocks. So we're going to dive a little bit deeper into that. And lastly, we're going to talk about why yields matter. So I know this week everyone was talking about how all the yields are rising and how that's impacting valuations. So we're going to talk a little bit more about that and give you guys a better line of sight into how this is going to affect our investment decisions moving forward. So with that being said, I'm going to pass it off to Syed to kickstart our tech update.
Hey guys, thank you Deepak. Incredibly, we're at episode 10 now, as we started back in December and we're already at episode 10. But so to kick off episode 10 and for the tech update, I just wanted to go over a few articles and news that I found interesting. So first of all, I'm going to bring up Solarwinds again because there's another development on that and how Solarwinds, now they're breached. There's a news article out there, again, link in the description, so check that out below, that their breach now includes NASA as a victim. So again, new things develop every time, as this breach was massive, and I keep reiterating the fact that don't be surprised if you hear like 2 months down the road that more and more companies were compromised. So link in the description, be sure to read that. And then after, another point I wanted to make, there is ransomware. So ransomware, there was a ransomware gang that hacked Ecuador's largest private bank, and that's just something that I wanted to point out. It's a great read and just shows you how like ransomware is a huge thing around the world. So be sure to check out that article as well. And then there was T-Mobile, who disclosed the data breach after SIM swapping attacks. So SIM swapping attacks are basically a method of social engineering. Not going to go into too much detail there, but again, link of the articles in the description, so be sure to check that out. And then lastly, I wanted to end off the tech update by mentioning this article that mentions that as the pandemic tails off, is with vaccines coming out and the pandemic eventually getting over with, attacks on healthcare institutions are going to remain unchanged. So things like phishing and stuff like that are still going to be out there. So be aware of those. And this article is a great read. So once again, check those out as well. But yeah, that was pretty much it. Kept this short and brief this week for the tech update because we got lots more to cover. So let's keep it going. All right, so moving on now. There was another short squeeze in effect as the Wall Street bets and the Redditors were back at it, promoting those the stocks, the short squeeze stocks. So AMC and GME and all of them. And again, part 2. There could be a part 3 coming up. You never know. But Deepak, what do you think of what developed last week?
Yes, man. So it was pretty incredible, really. It was in the middle of a market meltdown. GME obviously hit $450 at the height of the short squeeze. Fell all the way back to, I think, $40, $42, $41 per share. I thought it was probably going to go down to about $25, $30, but it turns out, like, when I saw it go from 40 to 90 almost in a day, I'm like, okay, yeah, this might not be over. And I think it went up to about 150, 180 again. So
yeah,
I don't know for a fact whether it's going to be over yet or whether it's going to continue going higher. But I was looking at the charts for both AMC and both AMC and GME, and I saw like there was like this bullish cup and handle chart as I'm looking at it right now, which seems to indicate to me that it might revisit those $400 levels. Obviously, no one can really say this with certainty, but I think there's something to it here, and I think they all have catalysts coming in. So I was looking at 4 of the stocks that were part of the short squeeze previously. So, Blackberry, that went to about $30 per share, I believe, and I think BlackBerry actually has some merit to it because it is a cybersecurity play and it's entering that space. So I think BlackBerry might be a good play. just
I
generally.
had a position in BlackBerry for that exact reason because I feel like they could merge with like another company, say for example Amazon, and do something in the cybersecurity or tech world, and that
Right.
could make them
Yeah.
rise, right? So definitely a good point there you mentioned. I was surprised it being in the short squeeze classification, but it is what it is, I guess.
I mean, if you remember, it was $150 per share at its height, right? And it went
Yeah,
all the way back to $5 per share. So
yeah,
it was clearly heavily shorted, and I think it could make a resurgence. But it's one of those that I think actually has some merit to it, as does Nokia as well, because I don't know if you're familiar with it, but Nokia is actually heading into the 5G space. So
yep, yep.
there's some merit behind that, and I think it's trading at around $4 per share, which I don't think is terribly overvalued. So it could be another short squeeze as well, but I think it has merit there. Even AMC in a way, right? Like the theater company, like theaters were big, and it's a reopening play, right? So as more and more people get vaccinated, and as these cities reopen and the states reopen, like I think their revenue could start coming back, right? And then again, they were obviously looking at being potentially acquired. I think it was by Amazon as well. So I mean,
Amazon, yeah.
do get acquired, that's another catalyst. Like BlackBerry, Nokia, AMC all have catalysts. And even if you look at GME, you would think that there's no real catalyst there. But the trial that happened with one of its biggest investors, I think his name is Roaring Kitty on Twitter, right?
Yeah,
He had the trial and they went through it. He was fine afterwards, but he went back and doubled down his position. So I mean, in a in an environment like this, something like that could even be considered a catalyst, right? So
yeah.
whenever there's a short squeeze, there's always a catalyst that leads to it. So I think all of these do have the catalyst still in play. And you know what? The retail investors, they're still there. They're still out there. And you know what? You can't rule out the possibility of another one. With that being said, again, it is really risky. So I would
Definitely, yeah.
recommend our viewers, as always, just to make sure that you're making smart decisions, do your own research, and do it, invest based on your risk tolerance. But again, if you are looking at taking advantage, maybe I would stick to something on the safer side like BlackBerry or Nokia because they
Yep,
actually have some merit to them. But
yep.
again, make informed decisions.
Yeah, BlackBerry's a good one. Nokia's a good one. Like you said, they're moving into 5G. So kind of surprised to see them in the short squeeze, and it kind of like I want to know the reason why these investors chose Nokia and BlackBerry to be a part of their short squeeze list. But again, I would look into BlackBerry and Nokia, but the other stocks, I personally would stay away from them, just because like yes, people are getting vaccinated, the theaters are going to open, but do you really think it's going to be the same as it was pre pandemic levels? People are kind of used to this lifestyle, right? So we'll see as time goes, right? But I personally wouldn't go towards AMC or even GameStop in that
Again,
sense
yeah,
because digital.
and GME's intrinsic value, it should not be $150 per share. I personally don't think it should be. So, I mean, if you're buying at these levels, you are risking a lot of capital here, right?
Yeah, yeah,
So
do your due diligence
yeah,
always before investing into these, and don't blindly invest. Like we always say in on our channel. And then I want to reiterate the fact that this is not financial advice; it's for educational purposes. Always, always, always do your due diligence. Do yourself a favor and do your own research and due diligence, and know your risk tolerance before putting money into this market, the short squeeze market, or anywhere else.
transitioning away from the short squeeze topic now, I wanted to also address for our viewers how to be defensive in the stock market when you see that it's going down. So, um, one of the easiest ways to be defensive is obviously to stay in a larger cash position. Um, Personally, I have shifted to 50% cash, just so that I can use it to dollar cost average in case these stocks continue to go down. But if that's not something you want to do, I personally recommend shifting more into more value investments rather than the speculative market. So the value investments being something like a Johnson and Johnson, a Procter and Gamble, even Berkshire Hathaway. Like that's basically his entire portfolio is value stocks, but it's almost like an ETF. And by that same token, you can just go into more and more ETFs, just so that you can continue to have sector exposure if you want. Like if you wanted like the cannabis sector, I've already recommended HMMJ as one.
Yep.
If you want to stay in the tech side of things, like there's also tech ETFs that map the Nasdaq.
Yep.
And then obviously the S&P ETF. So like if you do think the stocks are going to bounce back, maybe you can shift into these value plays or the ETFs. And then, like I said, the cash positions always helpful, because as the stock continues to go down, if you're highly convicted on it, you can still get in at good prices, right? Like, I don't think Johnson and Johnson's ever going to go down. So if you do get it at a cheaper price, it always makes sense to have cash on the sidelines ready to deploy, right? And the same goes for tech. I mean, I feel like the tech stocks were in general overextended. So if you have a chance to get Apple on a 20-30% correction, which is going to be crazy, but if it does happen, it's always a great idea to have cash to deploy in those situations. I mentioned briefly shifting away from speculative investments. I know a lot of people are going into penny stocks just to try their luck in a bull environment, right? Like,
Yeah.
those stocks go up a lot faster than these value plays that I'm mentioning. But conversely, when the stocks pull back, they pull back even harder. So until I see strength in the market again, I would stay away from speculative investments like that. And then lastly, just sizing the stop losses. I talked at length about this last week, so I'm not going to go into that again. If you want to watch that video, always feel free to go back and check it out. But I think now
Episode 9. Yep. Check it out.
9, yeah. I think the sizing of your position and your stop losses, like, you got to set those. If you're down $100, $200, whatever your stop loss is, you make sure that you're following that, because you don't know where the bottom is, obviously, right? We didn't know where the bottom was last March. We don't know whether this is going to be similar to that, or whether it's just a healthy correction to go higher, right? But in either situation, you should have a stop loss to protect yourself. And if you do want to, just go back to episode 9 and watch that in more detail. And always feel free to send Syed a message or myself a message, and we can clarify that for you further.
Yeah, thank you, Deepak. That was great advice. So moving on now, I saw bond rates rising, and I was wondering, and perhaps our viewers would like to know, what's the impact of that on the stock market?
Yeah, so that's a great question. So what happened really is that for the last little while, we've had crazy low rates, right? And the bond prices were falling. It was really good, because investors were looking at the interest rates. They're like, okay, instead of going into bonds, let's buy more stocks, because we're going to earn a better return on our investment.
Yep.
But slowly but surely, and this was to be expected, the rates continue rising. So as the rates continue rising, investors probably look at shifting some of their portfolio into bonds again, which can be looked at as more safer investments. And as money leaves the stock market and goes into the bonds, obviously the stock suffers. So that's an element of it. The other element of it is, and then this is why you see the NASDAQ being affected more, is that these hyper growth stocks, which aren't necessarily profitable today, the reason why their valuations are going up is because of lower interest rates. And from a mathematical standpoint, when you have lower interest rates to discount your present value, the prices are going to fall when you discount it to the present. So that's how the stock price is going to be pricing in these rising interest rates. So
yeah.
Initially, investors were expecting these interest rates, I guess, to stay lower a little bit longer, but as they continue to rise now, it's affecting how these valuations are being priced in. So I think it's a combination of both, which is starting to lead into the decline in stock prices.
Oh, interesting stuff. Okay, yeah, that clears it up a lot on my end, and I'm sure that's great insight for our viewers. Thank you for that, Deepak. So, yeah, those are the topics for our for episode 10 this week. We do have a lot coming up. So we do have a guest speaker scheduled, Nabi Ghani, and he's gonna come on in the future, in the near future, as a guest, as a guest speaker. So look forward to that. Nabi has a great story, and he's right now an entrepreneur and business guy. So look forward to that. And then we also have our crypto exclusive coming up as well, where the crypto exclusive was scheduled for this episode, but due to so here at the bottom line, we want to make sure that the information we provide to you guys is clear and concise and easy to follow, right? So we felt that putting the crypto information on this episode along with the stuff we had to cover today would be a bit too overwhelming for you guys. So we thought to leave it as an exclusive episode, and so that way you guys, it's easy for you guys to follow and learn. So Deepak and myself are working on that, and we'll have that out for you sometime this coming week. So look forward to that. Or some of the topics we're going to mention are how crypto works, so like blockchains, and then how crypto mining is done, and potential altcoins to look out for. Just some of the topics, and also, of course, crypto wallets, as we mentioned last week that we'll talk about. So that's going to be on the roadmap for that. So that's going to be in our exclusive series. Once again, the exclusive series is where like we go in depth into a potential topic of interest. So yeah, look forward to that. And once again, thank you guys for all the love and support that you guys are showing us. I know many of you guys have messaged us on Instagram and our personal accounts too for like potential topics you guys want us to discuss. We're on it, and we're going to listen to you guys because, as always, we want to give back to you and educate you guys. So we're on it, and we'll definitely provide that content for you as well. With that being said, thank you for listening to episode 10. We made it to 10 episodes so far, and we look to provide more great episodes for you guys in the future. Thank you, everyone.